if I wasn't allowed to trade, take profits or rotate and had to lock my entire crypto portfolio until 2030, these are the only 5 coins I'd be comfortable holding. No meme flips, no 100x lottery tickets, just maximum conviction. One of these coins is obvious, one is extremely controversial, and one is built almost entirely for banks and institutions, not retail. Keep watching because the reasoning here will completely change how you think about long-term crypto investing, risk and diamond hands. Before we start, let's set the rules, because this isn't a typical top 5 altcoins to get rich this month video. I cannot trade, no rotating, no digging yield, no leverage. I'm locked in until January 1st 2030. The goal isn't just to pump, the goal is these coins are still relevant, liquid and valuable in 2030. They have to survive brutal bear markets, regulation crackdowns, new tech cycles we can't see yet. And quick disclaimer, this is not financial advice, this is how I personally would think about a long-term skin in the game crypto portfolio. Always do your own research and never invest money you can't afford to lose. Coin 1, Bitcoin, the base layer of crypto. If I'm forced to hold to 2030, I'm starting with the asset already outlived 4 brutal cycles, Bitcoin. Why Bitcoin survives to 2030? Bitcoin is no longer treated like a tech startup. It's treated like digital gold. It's the asset that institutions, family offices, and now even some sovereign players look at as a store of value, a macro hedge, the base collateral of the entire crypto ecosystem. It doesn't need to ship features, it just needs to exist and remain secure. Bitcoin's moat is its decentralization and security. Highest hash rate in the industry equals to economic moat. The most battle-tested network, and compared to most altcoins, relatively clearer regulation in many countries. Digital commodity is a way better label than unregistered security. Bitcoin's main risks aren't about tech, they're about politics and incentives. Government hostility or coordinated mining bans. Long-term fee market sustainability. Once block subsidies reduce, will miners still be heavily invested to secure the network? If I had to sum up my conviction on BTC in one sentence, if Bitcoin fails, the entire crypto experiment fails. If that statement scares you, that's exactly why Bitcoin earns a 2030 spot. Coin 2, Solana. Next is controversial Solana. This is my bet that by 2030, crypto will have to feel like Web 2, fast, cheap and invisible to the average user. Why Solana survives? Solana isn't just a white paper narrative anymore. It's actually used. Active DeFi ecosystem, huge NFT activity, payments, trading, liquid staking, and Solana Mobile gives it a distribution edge that most chains don't even think about. Dev activity is massive and builders care about speed, cost, and UX. All things Solana leans into aggressively. Solana's moat is high throughput plus consumer UX, near instant transactions, extremely low fees, a user experience that feels much closer to Web3 apps than the clunky MetaMask multiple click experience most chains still have. On top of that, there's a strong VC backing and ecosystem funding that buys time to build real products. Biggest exponential risk, 2 main fears. Network stability perception. Even if uptime has improved, the reputation from earlier outdated sticks. Centralization criticism, fewer nodes, higher hardware requirements, and the narrative that it's too centralized compared to Ethereum or Bitcoin. Coin 3, Quant. Now for the coin most people don't fully understand, Quant QNT. This is not meme play, this is my infrastructure and institutions bet. Why Quant survives. Quant is built for governments, banks and enterprises. It doesn't really compete with other blockchains, instead it connects them. Think of it as a universal interoperability layer that lets you legacy banking systems, central bank digital currencies, CBDCs, multiple blockchains, all talk to each other in a way that's compliant and regulation friendly by design. You can't talk about long-term survival without including Ethereum. It's my pick for the default settlement layer of an on-chain finance. Why Ethereum survives. Ethereum is where a massive share of real crypto economic activity lives. DeFi blue chips, stable coins with billions in daily volume, real-world assets, RWAs, and tokenization experiments, and an exploding layer 2 ecosystem that keeps fees manageable while settling security back to Ethereum. Now, as said, one of these picks is going to be controversial and one is a pure long-term asymmetric bet. That's coin 5. If you want to see the final coin plus exactly how I'd weight these 5 in 2030 only portfolio, let's know in the comments and make sure you subscribe for a 2030 part 2. Have a great day. Thanks for watching Crypto Cobra this video and have a great day. Make sure you subscribe, like this video and share this video with all of your wonderful friends.